Breaking economic news, retail sales and PPI. Neither report was on the strong economy side. It took a while, but bonds did rally from 2.02% to 2.00%. Dow stock futures were up 19 points, then swung to down 9 points. For the economy, you're only as good as your last data point, and today's reports feed the beliefs of many that the stock market turmoil in August and fears of a slowdown in China have taken something off of the economic expansion here in the USA. It's called a slowdown. Two of Yellen's Fed governors, Tarullo and Brainerd, seem to believe it. Both have a history of being overly risk-adverse, seeing clouds on every horizon. The facts are that retail sales rose just 0.1% in September, and that 0.2% gain in August was revised down to 0.0 or unchanged. Retail sales were down in many categories in September: electronics, building materials, food and beverages, gas stations, general merchandise stores, even internet sales down for a second month in a row. We aren't sure what the consumer was doing in September. Perhaps they spent the money on service products, and services are not included in the retail sales report out today. Inflation, the PPI report was out for September, falling 0.5% in September, the first decline since April. These are producer prices, and the statistic was once the biggest market-moving number in the world back when inflation fears ran wild in the bond markets of the late 80s into the 90s. Our focus in the report is on PPI, final demand goods prices, ex food and energy, as a proxy for what inflation pressures might be brewing down at the lower level of production before it reaches a consumer. No special worries on price pressures building today, with September core prices 0.0%. August was down 0.2%. and July was also 0.0. No price pressures at the relevant PPI level since May and June. This could bolster the claim of some at the Fed who want to delay liftoff, waiting to see the whites of the eyes of inflation before they are willing to concede the labor market has reached the nirvana of full employment. Net-net, there will be no rush for the Fed to raise rates if retail sales and PPI are the guiding lights for policy. There were 8 out of 12 Fed presidents wanting to hike rates in September. Almost sounds like Yellen has a mutiny on her hands. But after today's data, we wonder how many votes there will be for liftoff in December. We would not get too bearish on the Fed rate hike December call, though. Retail sales were slow in August, September, but consumer spending in the third quarter will be very strong. And don't forget those shoot the lights out 18.1 million car sales in September. Don't get stuck thinking the economy is only running a pokey 2% something like real GDP. Business activity overall is strong, or it was. We will have to wait and see how the fourth quarter does. For now, for the economy, it is 12 o'clock and all is well.